charting. Are you guys good with the charting?
Hell no.
Hell no. What you mean?
Are you asking? Can we read that stuff right now? I can't. A little, a little bit, a little bit, a little bit, a little bit.
Where are you struggling at? Charting is easy. Where are you struggling at? Let me give y'all some game. I'm gonna try and see if I can make this Zoom very valuable.
I think one question for me is like, what specific time period should we be looking at? Should we just start with the day, then go within that hour, or do we look at a month? Like, where's that concept coming from in terms of looking at the times?
Good question. I got you. Say less. I prepared for this. So, okay. So STZ, for example. So we're looking at STZ, right? The first and foremost, we dealing with options. But before your options play could become profitable, you need to understand the charting, right? The candlesticks, where the support is, where resistance is, and certain patterns. If you see those patterns, then if it's forming at a demand zone, which will be support, like a support level, aka demand zone. You buy at demand, you sell at supply, right? You need to first establish your level. So the first thing you do, and this is answering your question specifically. So what I do is I'll go to my intervals, right? And then I'll start off with, say, a monthly chart, because it's a top-down approach. So you want to start from the highest time frame and then go down to the lowest time frame. So if you start on the higher time frame, I mean, not the highest, because if you look at the time frames, it goes as high as 12 months. So if I switch it to 12 months, each candlestick takes a whole year to form. But you see how it looks like. If you are swing trading, day trading, swing trading or day trading, you don't want to use a 12-month chart to make your decision, right? You can use it to establish where your levels are, but you don't want to use it to execute, get in a trade or get out, because it's way too large of a time frame compared to what you are doing. We are trading short term, so you don't want to necessarily use that to enter a trade. However, you can use the higher time frames to establish, important levels in the market. So like right here is an important level in the market. And I'm still answering your question. So start from a higher time frame and then draw your lines or your levels based on where price has pivoted, right? So this is an 8-month chart. So 8 months, I'll go down to 6 months, right? It doesn't change much. Let me go down to 3 months. 3 months, it's not changing much, right? Because the levels on the 6-month or 12-month is still solid. Also, what you want to do is when you're establishing your levels, use a line chart, because a line chart will give you more clarity on the levels. So you see, once I switched it, now I can see points where the market connected, right? When I say connected, this level right here and this level here, let me see if I can draw. How do you draw? Brush, highlight. Okay, let me highlight. Like right here. Oh, right here and right here. Y'all see that? How do I, why is this thing just clicking? I don't need you there no more. But like right here and right here, it connected. Okay. So that's what you're looking for. So now let's go to 1 month. I'm still answering your question specifically. So 1 month, right? 1 month, is there a level where the price connected? Yes, like
What you mean
right.
when you say, sorry, Block? What you mean when you say the price connected?
Okay, so levels where it bounced. So you
Okay.
see the pivot, you see the pivot points, like right here,
So you
right
talking about that
here.
pointy end? Okay,
Yeah,
I'm with you. I'm
like
with
where
you.
it comes and it bounces. So
Got it.
look at it intersects. So let me draw this line here and I'll give you more clarity on what I'm trying to say. So look at all the points like right here, right here, right here, right here. There's a level where when I switch it to a candlestick, you'll see what I mean. But it's doing this. It's doing this. So price goes up, right? And it comes down. You see right there, it bounces up. So that's what you're trying to find, like levels where the price bounces. And those are the levels where you want to buy from, because that makes it a demand zone. A demand zone is also support, right? Support is where people tend to buy, price tends to bounce. So support is a floor. And that's where you want to get in at, because you get a discount when you buy at, oh, what the hell? When you buy at those levels, right? So you buy here and run it up.
So
And
just to
then if
give you
it's,
some, just so I'm clear, so that point, that little that low point is like where Nike was the other day, where it went down. So now we're trying to get it where we got in, and then now we're gonna wait until they go up again, right?
we're gonna buy it to go up. So
Yes,
good.
that's what I mean. But we bought
Let's
it when it
switch
was
to Nike.
low.
So look at my Nike chart. So you see what I've done? These are my levels, and these levels is already established from like an eight month chart. So you see there's a point here. This is actually a good example. Let's use something. So highlight. So boom, 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 boom. No, that didn't hit where I wanted it to hit. Boom, 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 boom. And because there's a boom here, I'm expecting a boom here. You get it? And this is a monthly level. So imagine back here, 2003, Nike went up to 62, came down to this level. If you bought from this level, you made so much money, right? Or you let it go, let it come back down, correct itself. So once it corrects itself, you only want to buy from a demand zone. And you want that zone to be a zone that you've already established before you get in the trade, because that makes it objective when you're doing it when there's no money on the line. You don't want to get into a trade and then once you're in the trade, you try to find levels that are going to support why you got in the trade. No, you establish your levels first. And then you say, if price comes to this level, I'm going to buy. If it doesn't come to this level, I'm not buying, because that's the level that gives you the highest probability of winning, right? And it gives you the highest discount because you want to buy low and sell high. So for Nike, what we are expecting is for it to do something like this. Either go from here to 80, 83, come back down, or break 83 and eventually do this. Nike would eventually do this. You see what I'm saying? It may eventually do this, but you know, nobody knows how long it's going to take. That may take 5 years, 10 years, 2 years, who knows? So we are just playing it one day at a time. And for now, if it does go up, it's going to face resistance at 82. That is not certain. It's likely to face resistance at 82, right? But anything can happen in the market. So you don't want to speak in like, be so definitive with what you're saying, because anything, it can break through and you're going to be like, oh shit, I thought it was going to bounce. But there's a high probability that from 75, if it does go up, it will face some sort of ceiling at 82. And so if you buy, 82 will likely be the level where you want to take some profits, because it can go to 82, right? Do something like this and then get pushed back down. Get pushed back down either to that trend line and eventually go back up and break up, right? Or it can break down. And if it breaks down, it's likely going to go to 64, which would even be a better discount. Actually, this is good. That was a good good chart to use. Does that make sense?
I'm clear. I'm good. Thank you.
Good, yeah. So only buy from these levels. Only these levels. Buy or sell from here, where you see commonalities, right? Like, okay, price came here. And mind you, this is a monthly chart. So if we go down to, let's say, the daily, now it's gonna be more clear. So you establish your levels on a higher time frame using a line graph. Then once your levels are established, you can switch it to the candlestick so you can get more details, right? More defined details. So on the daily, you're not going to see much because Nike gapped down from 94 all the way down here. So if you want even more details now, you got to go down to, let's say, 10 minute. And the 10 minute is going to give you detail, right? Detail. So the 10 minute, if we were trading this level here, I mean, if we were trading this chart, this time frame, we could have made money on Nike, right? Because you could have bought here when it came down here, 75 to 75, 75. That's money, depending on what contracts you buy. Wait for it to come back down here, came to 74 something, jumped to 75.45. right? If you are like day trading. But I'm not a day trader, so I'm not interested in those little fluctuations. I'm trying to buy, give it time to come all the way up here or fill the gap all the way at 94. And that is going to take time. That is not going to happen within a day or two or a week or 2 weeks. That is why you give yourself enough time for that to happen. And that's where the expiration comes in. The expiration doesn't mean, the expiration just gives you peace of mind. So if you give yourself 2 years for Nike to hit 85 or 80, it's more likely to happen than if you have an expiration of 2 weeks from now and you're like, yeah, 94 strike on Nike. That ain't gonna happen.
That's what I realized. That we do. I'm sitting a lot of cash into these deals. That's what I realized last week on Friday. And so, is there a good strategy so we won't get a lot of our capital tied into things and still be moving?
What do you mean? Can you
Because, like,
rephrase
for
that?
example, we did PayPal. So I got money sitting in PayPal. Got money sitting. Everything we did last week. Um, and that's just sitting there. You know what I mean? Like on the trade. So I'm just
Right.
going to just keep putting it in. Is it like a strategy until I make, or I'm just have to just keep putting it
Oh,
in until I make
okay.
something, then pull out.
So
Do you get what I'm
PayPal,
saying? Because right now I'm just putting in with long term expiration date.
yeah, okay. So here's the thing. So with PayPal, Dell, and Palantir, those are supposed to be on one account. So the goal is you're supposed to have different accounts, a
I
different.
do. Okay.
So the the PayPal one, we are looking for 50%. The Dell, we are looking for 50%. Palantir, we are looking for 50%. So on that account, that is the 1K to 100K challenge account. And on that account, when we get in and we hit 50%, we sell. Then we wait for another trade and we go in, right? It's supposed to be like one trade at a time. But last week, I ended up doing 3 and then I added 1. Palantir, I took profit on that and left 2 runners. So I don't even consider that. It's still going, but it's almost like there's no risk involved because it already went up past the 50%, right? So once you take the profit, whatever you leave, so let's say we have 8 contracts and you sell 6 and you leave 2, you basically just play with house money at that point because there's your principle that you put up is no longer at play. You already took it out, and now you have a little bit of the profits to see if you can make more money with the profits. Does that make sense? So you can take
Makes sense.
profits and keep on playing the game, and that way all your capital is not tied in. So you
Yeah.
take profit and now you're using some of the profits to go into the next play. And then once you make money, you take some profit. You can take everything off the table